Hello everyone, welcome to our Trading with Fractals webinar on Wednesday, 11th of July. Today, we're gonna do a very basic webinar actually, and we're gonna see a quite easy and very easy to interpret actually an indicator, fractals. Fractals are easy to be used, short-term, long-term, and etc. So before we start, just the usual procedure, just wanted to make sure that everyone can hear me loud and clear and see my screen as well. Just a quick yes would be enough. Hello, Eric. So I assume Eric doesn't have any audio or visual issues. Thank you, guys. Thank you for the feedback. So if I don't manage to cover anything that you ask, to reply within the webinar session to any of your questions, don't hesitate to contact me. Send an email to webinars@hotforex.com. and I will reply as soon as possible. Also, you know that we have Facebook page, Stuart's Hot Forex Powell. So anytime you can contact us, and we're here to help anyway. So any questions that you have, there are plenty of ways to contact us, guys, and we're here to help, as I said. So here's me. No, it's not me, it's the disclaimer. Sorry, admin first, and then I will introduce myself. So, disclaimer, this material is provided as a general marketing communication for informational purposes only. Nothing in this communication contains or should be considered as containing investment advice or an investment recommendation or a solicitation for the purpose of purchase or sale of any financial instrument. We make no representation and assume no liability as to the accuracy or completeness of any information provided. We shall not be held liable for any loss arising from any investment made based on the information provided in this communication. This communication must not be reproduced or further distributed without our prior written permission. Risk warning: trading Forex and CFDs may not be suitable for investors and carries a high degree of risk to your capital. Trading such products is risky. You may lose all of your investment capital. Admin's out of the way. That's me. I'm a market analyst here in Hot Forex, 2 years now. Hopefully, I managed to help you, some of you so far, with our daily reports in the website, analysis website, or through the videos that we are doing and webinars that we are doing with Stuart. So I don't have anything to say. I'm here to help. Anything you want to ask, just don't hesitate. Send it your question. I will reply as soon as possible. So quickly, I'm gonna start our trading with fractals webinar. So today, this webinar actually is a webinar because I wanted to give this webinar because it's a way of fractals are a way of recognize price pattern and to discuss an indicator that is instantly flags up the patterns on a chart on your charts. So these patterns, the fractals, are a good tool and easy to be used tool actually to identify patterns and to in any time frame that you are actually using. So today we're gonna see some of the theory on the back of fractals, what actually they are, the determination of fractals, their characteristics, and of course the more important part of the webinar is how they can be used, how they can be used in the financial market, in the Forex industry. So before we start, okay, yes, fractals can be used. We're gonna see how they can be used as support and resistance levels, and how we can interpret their signals, and also how to add triggered lines to the fractal analysis as well. Before I go, I start with the theory on the background actually of fractals, how they have initially discovered and what they actually are and what their background. I would like to know how many of you are using fractals in your trading. in your daily trading routine, or you are aware of fractals. Anyone? We might have a bit of delay on the question box. Aware but don't know how to use. Aware but do not use. Yes, I do use them, Victor. If you see my reports, they are always there. Always. I kind of love them because they, as I said, they are quite straightforward, especially for intraday traders. Good. Okay, so we have some mixed response. Some people are using it, some people don't. Some people are aware but never used them before. Okay. So I'll wait for your feedback then after the webinar, whether you like the fractals or not. So just briefly, quickly, let's see how what they actually are. So what they actually are, the background, the theory behind the fractal analysis. So initially, what fractal means, fractal actually is a repeating pattern. So it's like it occurs, it's the same configuration occurs through the structure on a variety of different scales. So I know this might sound a bit complicated, so let me break it down. A fractal, think the fractal as a geometrical shape, okay? I don't know if the pictures are helping. So in this first pictures, like we have, let me put the pointer as well. So in this picture, these are different kinds of fractal patterns. So in this picture, we have a triangle. A triangle is repeated and repeated and repeated, and we end up with a broccoli. In this one, we have, oh, I cannot draw. Why? Just give me a second, please. Up. No, doing something wrong, it seems. Sorry. You can see my pointer, but it seems I cannot draw. Okay, in this picture, we have a repeated pattern, which is this. It's like that. It's going like that all the time. It's like that and like that, and like that, round and round and round. So if make the determination of fractal quite simpler, a fractal is a geometrical shape that it is self-similar. So the whole frame, if you take the first picture, say the broccoli, the whole has the same shape as each one or more of its parts. So this shape is the same as this bit and this bit and this bit. So it's like it is repeating itself. Every single part of its shape, it has the same shape as the whole geometrical shape. So it's an object, is a fractal if the same pattern occurs again and again at every single size. Okay, so it's a repeating pattern. In nature, as I said, you can understand that from the broccoli, we see different fractal patterns in the growth of crystal, or the branching of twigs on the trees, or the structure of snowflakes. Think about snowflakes. It repeats the same shape again and again, and then we end up with a whole snowflake. Or even the formation of a galaxy is, again, we can see fractal patterns are repeating the same shape as a whole. So fractal patterns are recursive because no matter how complex the whole is, it is built from many repetition of the same procedure. They are self-similar, and in that, if you look at a small section of the pattern, if you take that broccoli and cut this bit, this small section, it is no different than this much larger section of the pattern or the whole one. Okay, so they are used this is like more of a mathematical part, physics. So it is used mainly from scientists to explain some phenomena. Oh, sorry. What happened to my slides? Sorry. Up. So, okay, it is as I was saying, it is mainly used from scientists. It is known as it is based on the chaos theory, and it is used by scientists in order to explain some phenomena in the nature or in the climate phenomena, artificial ones, or even some chaotic phenomena such as snowflakes, crystals, and galaxy formations. However, let's move on. Let's not complicate things. What matters for us right now is to find out how they can be applied in financial markets in our daily trading routine. So let's move on. Sorry. So, through the study of fractals, uh, the study actually of fractals is back to 17th to 18th century, and it was actually the term fractal was actually used by Benoit Mandelbrot, who is known as the father of fractals in geometry back in 1975. So it was actually the creator of fractal geometry, and was actually the one that managed to apply fractals not only on weather prediction or design or medicine, but also on financial markets, which is the one that we want to focus on. So the analysis, what actually Benoit did is actually on the analysis of the cotton price. He tried actually to analyze the cotton price for the period of more than 100 years, and this ended up because he wanted to analyze this 100-year price action of cotton. He ended up to create this effective trading technique, fractals, and she initially mentioned it as the well-known trading house. So that was Bill William. It was William who, for the first time, suggested that the market was chaotic. Was chaotic, and multiple factors and self-regulative systems and castle all linear models can be applied in the financial markets. It was Bill Williams that firstly suggested it for this chaotic theory, that chaotic theory can be applied in markets. And then later on, it was again Bill Williams who also suggested that this complexity that markets have is building up from self-similar patterns of the trade behavior. So fractal theory suggests this complexity is built up from similar patterns of trader behavior. So actual trade behavior creates some continuous patterns of the same shape again and again and again, and here we have the same, let's say, behavior repeated through the years or through the same day, through the same week of the same self-similar pattern. So many people believe as well, if you have seen, if you have heard some economists, some other analysts, there are a lot of people that they actually believe that markets are random. However, although you might see the charts and you're like, see, oh, why this is happening? Why it's so random? Or prices appear to be random. Actually, they do in fact follow a pattern in the form of trend. Always, history repeats itself. You already know that. History is always repeat itself. So one of the most basic ways in which traders, as a traders, can determine the trends is through the use of fractals. So fractals, guys, uh, have actually give you the benefit. of break down large trends into more simple and predictable reversal patterns. So if let me say this quite simpler, I think that most traders will agree with me, will agree that market patterns are continuously repeat themselves on all scales, hourly, minutes, 4 hour, daily, weekly, and in general. So markets are repeating themselves continuously. Prices are moving up, are moving down, or moving sideways, but we can identify that this that very moment, this particular pattern. Oh, I have seen that pattern again last week, or in Asia session. So it repeats itself in long term, in short term, and etc. I don't know if you are aware of any other patterns such as candlestick patterns, wave patterns, but they are there are many patterns that actually repeat themselves, and this is confirmed by fractals nature. So fractal is just a way that we can use in order to interpret the stock price move or forex currency price move, and in general any asset that we wish to investigate. So that was the determination in the background of fractals, but let's see more of a technical stuff. Are you with me so far? Everything so far is okay? It was just a theory. Sorry if I spent too much time on it. Yeah, okay. Okay, let's see. I don't know. Can anyone see the fractals that I have plotted in this screenshot? Are they visible? I use a gray color. Hopefully it's visible enough. Just a quick yes. Barely. Oh, sorry about that. I thought because I thought that was clear. Sorry about that. Okay, I will try. I will when I bring my MT4 in. I will change the colors, and hopefully it would be clearer. I cannot change that on my slides right now, but I will use a yellow maybe in the actual charts, in the actual MT4. So fractal indicator. The fractal indicator is a support and resistance indicator. It's an easy way of setting your support and resistance level. Also, it can help you to identify some reversal points in the market, or some along, as I said, with some resistance level, maybe some key psychological ones, the round numbers. There are some, for each particular pair, there are some psychological resistance and support levels that if that breaks, we said if that psychological break, it means that and that and that. So it's you can identify, as I said, reversal points along with important levels such as resistance support levels. Also, it can be used at any kind of market, trending or ranking market, at every single time frame. Not many indicators can be used in ranking market. You're really aware of that. There are many indicators that they don't really help if we are in a consolidation mode, like today. Today we have seen, I don't know right now, I haven't seen cable lately. I have seen it since morning, but it was mainly in a consolidation range. It was bouncing up and down in the same range. So not many indicators can be applied in a ranking market, but fractals are the ones that they can actually be applied even in a ranking market. And more important of all, the most important of all is that they can be applied in every single time frame. So many of you might be intraday traders, maybe daily one, monthly, minute one. I have just met a trader that is actually trading in a minute chart. That's impressive. I cannot do that. But yes, they can be even used in a minute chart. They are giving some powerful signals, and why they are powerful? Because they are straightforward. They are easy to interpret. And also it can be combined with other indicators that you may use, maybe some momentum indicators, or like MACD, RSI, and etc., or Fibonacci retracement, or moving average. It's up to you. It can be combined with any other indicators that you're currently using. And of course, it has these shapes. Fractals are given with these shapes, these arrows, lower arrows and upper arrows. So how they are actually, what they consist, how they can be formed. So if you will only identify a fractal only if you have 5 consecutive candles. So this candle pattern consisted by five consecutive candles, and a fractal would be applied only. You will notice a fractal only if the central candle of these 5 candle patterns is higher or lower than the 2 preceding ones and the 2 follow bars. So what I mean by that? So we have 5 candles, okay? We will see a fractal in this pattern only, a bearish fractal actually in this pattern only if the middle one, so the 13 in a row, the middle one, is higher than the 2 previous one and the 2 and the 2 that followed. Also, you see a bullish fractal only if, again, in the case that we have a down move, the middle one is lower than the 2 previous one and the 2 the two candles that followed. So this was just a graph, but these screenshots are taken actually from my MT4. So you see this middle. This is a five candlestick pattern, 5 candles pattern. So in the middle, we have a fractal drawn because the 2 previous candles, the 2 preceding candles were lower than the third one, and the 2 that follow, were again lower. In the other side, a lower fractal was formed because in the middle, the 13 the row candle was lower, the lowest low, the lower low, it was lower than the 2 previous ones or the 2 that they follow. So what does it mean if we have seen the fractal be up, pointing upwards, or if the fractal is pointing downwards? So as I already told you, fractals can explain the price movement. So what are this actually is saying to us? An up fractal is a bearish pattern. So in the first picture over here, the first screenshot over here, if you see an up fractal, then this is a bearish pattern because it's saying actually that even though we were in an uptrend, we are possibly gonna face a swift to the downside, okay? Because we have this peak over here, but our later on our price moved lower and lower below this peak, okay? So this is a bearish pattern. Up fractal is a bearish pattern. It's a possible swift from an uptrend to a downtrend. On the other side, a down fractal, such as this one, is a bullish pattern. Why? Because it's saying that despite the fact that we were already in a downtrend, it's likely to face a possible swift from downtrend to an uptrend because the next 2 consecutive bars were higher than this drift this lowest low over here. So it's likely to face a swing higher. So this is a bullish, this is a bearish pattern. So you need to make sure, like every single candlestick pattern and every single pattern, I don't know, wedge pattern, there are many candlestick patterns, evening star patterns, morning star patterns. Always, for every, as is a rule, for every candlestick pattern, you need to wait to be fully formed. So in order to have a further confirmation to your trading decision, you need to wait until the fifth candle is closed. So in order to have this fractal candlestick pattern to officially close and officially to be formed, you need to wait for the fifth candle to be formed in order to make your trading decision. Okay. Okay. Otherwise, guys, if you don't wait, if you are in a rush, it's not good for the trading. Trading is all about discipline. You need to control your emotion. Don't be overexcited. Oh, this is a bearish pattern. I need to enter. No. Stay calm, discipline, risk management first of all. Don't get greedy. Wait for the pattern to be fully formed and then to trade your trading decision, and then to enter the market. Don't let your emotions lead your trading. Otherwise, this would be might end up with a major losses. So let's move on to see some examples. So here I have a dollar yen monthly. Unfortunately, it's not up to date. This is I took I took a very long-term chart because it was a very clear example. So this is since 1993. So, and the monthly one is a long term. It's just for you to. I just wanted to give you an idea how the fractals are working. So let's take, for example, the first bit. So in between 1993 and 1994, we have seen dollar yen drifting lower, following a downtrend, lower lows, and again lower low again, and a down fractal. So this down fractal was formed after a very sharp rally, and it followed with not only two consecutive bullish candles. However, it managed to recover. Undo. Erase a bit. Let me erase this. Okay. So we have seen this at the hitting at the bottom of 79, 75 area, again forming a down fractal, which later on a rally followed actually. So a rally with 1, 2, 3, 4, 5, 6, 7, 8, 9 consecutive bullish candles. So you have seen, as we already seen, that the down fractal is a possible switch. It's a bullish pattern, and it's a possible shift of a downtrend into an uptrend, and this is actually what happened. From that time onwards, we have seen dollar yen rallying and hitting the top of 148 area. 148. That is a massive move to the upwards. In this area over here, another fractal was formed, an upper fractal this time, which it was confirmed with two really sharp, big candles. Can you see this? This is massive. So after the formation, the fully formation of these 5 candles, 1, 2, 3, 4, 5, we have seen these up fractals alerting that it's possibly to have a swift of the uptrend to the downtrend. And this is what actually happened. We have seen a dollar yen drifting lower over here, making a slow correction to the upwards, but continued downwards again a correction, but then another big drift, big decline down to the previous support, the year support, even below this year support that we initially see in this down fractal. So in general, okay, you can see that there are many fractals over here. I just wanted to emphasize on this just to give you the big picture, but we can see a small we'll see small shorter time frames. That was just an example, okay, just an example of some massive movements in long term. So that was for dollar yen as an example. And for the performance of dollar yen so far, you have seen we had a 5 consecutive fractals over here, signaling that we are soonish gonna rally higher. Indeed, that happened in 2014. Peak up to 126. Three fractals, up fractals over here, suggesting that it's likely to see a swift to the downside. Indeed, that happened, and currently we are consolidating today at around 111 area. So that was just an example, a long-term one. Let's move on, and I will bring my MT4 in to see more examples in an hourly time frame. In an hourly time frame, and maybe 30 minutes one if you want to. It's up to you. No, they are not delay indicators. They are immediately formed as soon as the 5 candles pattern is formed, is fully formed. Sorry if it seems delay in this chart, is because it's a monthly one. And if you notice, there are many fractals over here, but I just emphasize on this one and this one because they were the ones that after those we had a very sharp movements, a very big movement. So that's why I emphasize on that. But they are not delayed. This is a monthly chart, so don't. It was just an example, okay? I will give you some examples of the hourly or 30-minute charts in the MT4, and you will understand that they don't have any delay. It is not a delay indicator. So before we move to our charts, I would like just to mention some advantages and disadvantages that you need to take care of if you are using fractal indicators. So Fractal, on the positive side, on the good story, on the good side of the story, fractal indicator offers multiple advantages. So let's overview three simple reasons why you should use this indicator. So the first benefit is the simplicity in viewing and digesting the charts. They are very simple to interpret them. So the fractals can provide you easily, or they can provide me even an immediate, an instant overview of the major support and resistance levels on spot. So this is effortless for us because the fractal indicator is doing it for us. It's automatically updated and automatically pointing to us the possible support and resistance level, which by using these support and resistance levels, these support and resistance levels can be used for filtering out a trade setup and for spotting some major bounce or breakouts or break spots. Okay, so by viewing fractals, you immediately identify support and resistance level, and you know that if it breaks, If I see my price action moving above and breaking the support level, is likely to drift lower. If it breaks the resistance level, is likely to see uh, price moving higher. So it gives you a simple viewing and digesting of the chart along with support and resistance level. The second benefit is that it connects. You can, it's like, it's good to, it gives you the second benefit, let's say, is that it can identify the trend for you. So if you see some consecutive fractals and you put a trend line on, you connect the fractals with a trend line. So this helps you actually to identify the trend by simply checking the sequence of the fractals. So the higher highs by connecting the higher highs and lows, or by connecting the lower lows and the higher highs. And so this is give you so in this, if you see at the bottom, I connected the, okay, I have another fractal over here, but it doesn't, I hide it a bit with this trend line. So if you connect the high fractals, you can see that you have a trend line and it's pointing to the downside. Even if you're in a sideways price action, if you connect the lows, the consecutive low fractals, it gives you a neckline of the here of this price action and give you again a support area. If it breaks, you're saying, if support breaks, then we move on to the next support level, we move downwards, and etc. So even when you are in the sideways, you can identify the trend by connecting the fractals. The third benefit is that it can be used for trade entries, for actually it could be your entry point, or for trade management. And what I mean by that, the break of fractals can be used for potential entry setups as price breaks through support or resistance level. I have said that back on the first benefit with the support and resistance level. So fractals can give you some guidance of your future entry setups. Also, they can be used for placing your stop loss. So you can place your stop loss below the closest or the second closest fractal. Okay, a long setup will have a stop loss below the fractal support, whereas in a short setup, you go with a stop loss above the fractal resistance. Okay, the same logic can be applied for a trial stop loss that would actually use newly formed fractals to reduce the risk or lock in your profits. So you can actually use it even in a trial stop loss, or in a pending order, on spot entry to the market. You can simply use the breakout of fractal or the breakout of the trend by connecting the fractal, or by the breakout of the support and resistance level that initially fractal indicator suggested to you. So disadvantages, some things that you have to take care of are this. So even if they give on immediate and easy to interpret signs, even if they give you some simplicity to your trading style, they are, as every single indicator, the longer the time frame, the more reliable it is. Okay, of course, I will mention that they are not reliable for scalpers. I said at the beginning that they can be applied in every single time frame, and that it is indeed true. But remember, it's just an indicator. It's just an indicator. So if for example, I can claim that they give a 90% correct signal in a daily time frame, in an hourly time frame or a 30-minute one, it won't be up to 90%. It might be 60%. It might be 50%. So the shorter the time frame, the not so reliable they are, but they can be applied. Is the in order to be on the safe side, is you have to do a good risk management. You need to set your stop loss in the most appropriate level, and your target not to be like not realistic. So you need to combine fractals, maybe with some other indicators, in order to make these short-term entries more reliable and more riskless, if I can say that. There is nothing that can be riskless in forex industry and in financial markets. You know that markets are unpredictable. They can be affected by everything, politics, news, data, and everything. However, as far as we can, by applying some indicators, we're reducing the risk to our trading. Additionally, news and fundamentals have a significant impact on fractals. Not only fractals, you're aware that if something happens on news or fundamentals, none of the indicators could actually predict that. I mean, like last night, Trump suddenly imposed 200 billion tariffs against China. Even if the market was, let's say, pointing to one direction, that immediately switched the momentum to the other direction. So news and fundamental have, of course, significant impact on fractals, like every other single technical indicator. So they are lagging indicators. They are best for confirming a move or a reversal. Okay. So that's why it's good to combine them with something else, such as Fibonacci levels or a breakout of moving average. And so, as I said, it needs to be combined with other indicators. So in this chart over here, I have combined fractals with moving averages and Fibonacci. So I will explain this cable 1 hour chart right now. We were in a clear downtrend. Even if you connect the fractals, you see that it's pointing to the downwards. It's a downtrend. However, once this on this 5 candles pattern formed, this is 1, 2, 3, 4, 5 candlestick pattern, I have identified a low fractal over here. What low fractal is saying that is likely to see a bullish movement. And this would actually happen. Once the 5th candle is formed, despite the fact that we have seen this lower fractal, this lower fractal came along with a break of the 20 period moving average. It broke also the 200 moving average, which is the red line over here. It broke the 200, it broke the 20 moving average. It also break above 23.6 and 38.2 Fibonacci retracement. So the combination of all this, along with a trend, the resistance level that I initially posted over here, once I noticed 2 consecutive fractals over here, up fractals, that over here in this area, the cable was unable to break above 140.85 area. So I plotted this trend line over here when I saw this consecutive up fractals. So we had 5 signals suggesting a movement to the upwards. The low fractal, the break of 200, 20 period EMA, the break of this immediate resistance area, and the break of also of 23.6 and 38.2 Fibonacci retracement. So all these suggested a swing to the upside, and this what actually happened. It moved up to 141.50 50 area. Okay. So by saying delayed, you're referring to lagging. Yes, indeed. They are lagging indicators, but only in a shorter time frames. Okay. And remember, they are just indicators. They are based on mathematical formulas. So it's good. It's always good to combine one indicator with few others, maybe one more or two more indicators, just to confirm your entry. This reduced the risk. Yes, Fractal is a lagging indicator. Is good for confirming a reversal or a confirmation of a continuation of the current move. However, it's good to be combined with some other just to give you further confirmation on your entry. Okay. What if, Rashid is asking, what if the 5th candle is very long candle? Can it be entered along the line? Can it be entered along the line? I don't get this question. You mean you want to enter prior the formation of the 5th candle because it was too long? I mean, you're currently seeing a very, very long 5th candle, but you don't want to wait until it finished in order to enter the market. What if it retraced? So until I'm like, I need 10 more minutes for the candle to close, and then something happened. I don't know. Like now, we'll soonish gonna see the what data we have in 15 minutes. Nissim B member is speaking. So what if it's actually it suddenly reversed back and closed dodgily? I don't know if that was your question, Rashid. It was your question, to enter the market before the 5th candle is fully closed and the fractal is fully formed. Let me know. Okay. So let's move on. So far we have seen the advantages and disadvantages. We have already seen how the way of setting resistance and support level. However, in this slide, we're gonna see again how you could actually use them for entering the market. So, as I already said, they can be used for determining the market direction. Or they can be used for identify the potential market direction. So as we already said, they provide immediate support and resistance levels. So if you emphasize on this example over here, we have seen this asset traded quite in a ranking market. Okay. However, we had an upper fractal on this an up fractal over here. So once we have seen an up fractal, we are setting a trend line. Okay. Then it moved lower and created an immediate support level in this area over here, an immediate support level. But after those two bounce, it continued to rank and bouncing to this area over here and down to this support area over here. Later on, we have identified two consecutive candles, two consecutive down fractals. So by plotting, by connecting these consecutive candles, we end up with this support area, immediate support area of this ranking market. Over here at the upside, we have identified three consecutive up fractals. So by connecting, by setting actually trend line slightly above these fractals, we have the immediate resistance level and another second resistance level at this up fractal over here. So we have two consecutive, two resistance areas so far, this resistance area so far, and a support level. So how fractals can be used? If we're saying in theory that if the price breaks support or resistance level, then that should be our entry level. And if you emphasize in this example over here, our pair, while it was initially moving in a ranking market, it breaks sharply. You see, it breaks quite sharply with this big body down fractal. Our immediate support level, which was initially set by two consecutive down fractals. This sharp break lower and the closing of this fractal below this support level, could be set as your entry level, as your short position entry level. So once you see something like that and you enter the market to the downside, you open a short position, then you can set your stop loss at the up above the latest up fractals, which was this in this area. So the latest up fractal was this one over here. So you could have set your stop loss over here, or if you, let's say you are your target was very far away, so you wanted to stay in the market for quite some time, you could even have set your resistance area, your stop loss back in the previous up fractal, which was over here, if you want to be in a safer side, let's say. So a short position, a short entry can be done if price breaks the down fractal or the considering the direction of the trend is down. So we are saying if we connect this lower lows, yes, it's to the downside. So this closed below the support and continues for two consecutive. Like if you want to wait, you can see that it confirms that is likely to move to the downside for quite some time. So in the case of a short entry, you can enter the market short if the price breaks below breaks the down fractal. Considering the direction of the trend is down, and a long entry could be taken if price breaks up fractal, considering the right direction of the trend is upwards. Your stop loss can be set, as I already said, below or above the closest or the second closest fractal. So you need to be at least patient to wait for the fractal to be fully completed. So in this case, our fractal was completed actually once this our fractal was completed. It was an up fractal and it was initially completed over here, but we didn't had a break of the support, so we wait a little bit more. We had this close of this fractal over here. So if you want further confirmation, then wait for the fractal to be fully formed, and which will be up here. If not, you can just say, okay, pending order, enter, short if this area, this support area breaks. Okay, that was in the case of a pending order. Oh, I had a bigger slide and I was analyzing to you the short one. Okay, this is the same example. This is the same example. You can set a pending order saying my entry will be on the break of this short, so of this immediate support level, or if we had in the case on the next slide, I have an inverse case, which is on the case of an uptrend. If it breaks my immediate resistance, I will enter long with stop loss set up at the latest or second latest down fractal. So this is the inverse situation of what we have seen in this example. So this is the long entry. So we are initially in a ranking market, then we were drifting lower. We have seen a downtrend channel going down and down and down and down. Then we have seen this low fractal over here. Then it rebounds a bit, didn't manage to go higher, down again, up again, a second consecutive up fractals. So by seeing this second consecutive up fractal, you know that you're above the fractal, this is a quite strong resistance area. Then once this is formed, we have seen it drifted lower, making another consecutive down fractal. So this was a good support area, because every single time that the pair, in this case was dollar CAD hourly one, every single time it hit this area, it was bouncing, rebounding higher, rebounding down, rebound, down, rebound. So this is a support area and our potential stop loss in the case that resistance breaks. And in this situation, resistance indeed breaks with this candle initially, lower again, making some correction, but then again higher and closed higher as well for 3 consecutive candles. This triggers the break of the resistance of the immediate resistance, alerts a long entry with stop loss at the latest or second latest down fractals, and target can be set on the latest up fractals, which was up here. You see the latest up fractal that you had after the break of the resistance was over here. So that could be your exit. Okay, that could be your exit area, or your exit area you can claim that will be above moving average. Let's say it's up to you. It depends on the risk and reward ratio that you are looking for. Okay. So if I was trading this pair, let's say on the break of this resistance, I will had target up to this latest fractal over here, and we support at this support area, stop loss this support area over here. Yeah, that was in a long position, example. Can this support be drawn like trend line by joining fractals? Actually, yes. If you're referring to this support, yeah, I connect those two. I initially set a trend line over here, or at least I highlight this down fractal just to have it on mind. And when I saw the second consecutive down fractal, I connect them, and that was my support area. Or if you want a tighter stop loss, if you, I don't know, your risk and reward ratio is higher and you want a tighter stop loss, then you could set your stop loss at this latest down fractal. Okay, so it's up to you. Previous slide, you're referring to this one. we have two. I have two examples of resistance area over here of stop losses. It was this line, or yeah, this line, this the connected 1, 2, and I have for the confirmation over here, I have the two consecutive, two fractals, actually, two up fractals, saying that this is a supported, a resistance area, because it didn't manage to break it 1, 2, 3 times. And if I want my stop loss to be higher, another resistance area could be on this up fractal. By joining initial fractal signals. Don't really get it. Do you mean like trend line, having like that? I don't really know. That's not correct. What do you mean? Which one shall I connect? Let me read again your question. By joining initial fractal signals. Oh, Rafi, rough. So which one you want to be your support? Sorry, support in this support. So you're referring to this area. So you wanted your maybe your entry level to be over here in this fractal. This is what you're pointing out. This fractal, or by joining, by setting it a trend line, a neckline actually, like this is what you're referring to. Yes. Okay. Okay. This, yeah, that's not wrong, but have in mind, this example is pointing a ranking market. So by setting a trend line like that, you might have an entry, short entry earlier, so getting a lot, gaining more than this, that get entering the market in this area. However, this could be easily be a false alarm as well, because we have seen for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 16, 19, 18 consecutive candles that our price is ranking, is bouncing between this range. So this is quite risky. This it depends. You're not like you entered the market without actually leaving any confirmation. Okay, you have a confirmation of the 20 period EMA, but you didn't let actually the upper fractal to be fully formed, because it was fully formed once this candle was finished. So your entry could be over here on the closing of the fifth candle, and not on the break of this trend line, because this is the fifth candle of this up fractal. So the first sign that is going to reverse to the downside was this up fractal over here, which was formed and drawn once this candle was formed. So I agree with you, is a quickest entry point, but not fully confirmed, so not fully accurate. Okay, so just if you are doing something like that, just really be careful in your stop loss, maybe tighter stop loss, just to not to face major losses. So you can take consecutive fractals at same area to indicate support or resistance level. Yes, that was how support fractals are helping you. If you're taking consecutive fractals, then this pointing you some support and resistance level. It might be not 2 or 3 consecutive, might be just a single one if you see a rebound of the pair. However, if the more there are, the more reliable and the more accurate and the more stronger the support and resistance area should be. Okay. Okay, before I end up the session, I just and just to give you time to have further questions, I just some I just wanted to give you that this weird situation that you sometimes gonna face in the market. You sometimes gonna see two fractals in the same candle. Can you see this chart? At the same candle, we have seen an up and down fractal. So that means an extremely indecision in the market. So what you have to do in such situation is simply to ignore such fractals, because they don't give a good a clear direction of the market. This suggests an indecision in the market, so it's good to wait until you have a clearer direction of the price action, maybe with the following fractals, or a break of moving average, something else, because this suggests an extreme indecision in the market. So it's not it's a very risk entry to the market. So wait, it's better to remain out of the market until we have until you have better signs of the potential move. Okay. Okay. We are nearly at the end of the session, guys. So if you have any further question, it's now the time to stick in the box. Until I get some question from your side, I will just recap and saying that I will use Jesse Livermore quote, one of the greatest traders of all the times, who has reached the same conclusion in his book. He actually said that I learned early that there is nothing new in Wall Street. There can be because speculation is as old as the hills. So whatever happens in the stock markets today has happened before, and will repeat happen again and again. I've never forget that. So I've used this Jesse Livermore quote because it simply gives you the picture of the markets. Is history repeats itself, the same as the markets themselves, the same as the stock markets and in general the financial market. So this is where the whole fractal theory is based on the reputation of the same markets again and again over every single time frame. So if you have seen something like a pattern to the upside or a pattern to the downside, this is something that happened again and again. So go back, take your charts backwards, check how the asset was moving like the last month or the last year. So this will give you an indication how it's likely to be, whether it is likely to repeat itself or not. Can I rely on fractals when one is the current pair market is open and the other pair is closed? Can I rely on fractal when one is the current pair market? I'm not really understand your question, Patrick. No questions from Patricia. Thank you, Patricia, for attending. Is it ideal to set a stop loss just above the fifth candle after the trade is entered? Yes, okay, it's okay. You're getting a tighter stop loss, so you will not face major losses if it reverses. That's okay. However, it's likely to you could end up with stop loss you're likely to hit your stop loss quickly, but then going to the direction that you initially wanted. So a close stop loss, a very close stop loss is not good either, but not even a very high stop loss is good either. So you need to find the balance. You need to set a realistic realistic stop loss. A too tight one might be hit, and then you can see that, oh, it hit my stop loss, but then it hit my target. So you miss the opportunity because you simply set a very tight stop loss. A very high stop loss will end up with major losses. It's good to make a balance, to balance, to find a realistic, to set your stop loss quite realistic. And it's all about your risk and reward ratio. Set a reasonable risk and reward ratio, 1 to 2, 1 to 3, and etc. Stop loss is a point where you give up the trade. Yes, is where the stop loss is where you're actually your position closed without any gains and actually losses. So it's your safe level for not ending with major losses. Which time frames do you recommend using fractals? Okay, I always recommend hourly, 4-hour, daily ones. I don't trade in a minutes time frames, but it's up to you. It's up to your trading style, but they can be applied for sure in every single time frame. Just combine them with Fibonacci and moving average. If you, Timothy, if you're trading a 30-minute chart, maybe you can consider a 5-period and 9-period moving average, exponential moving average, to be combined along with your fractals. So that was from me so far. Hopefully you know hopefully I replied to all of your questions. So this is the forthcoming webinars. Unfortunately, I'm running out of steam. If you have any further questions, just let me know just send an email in webinars@hotforex.com and I will reply to you as soon as possible. Thank you for watching. Really appreciate it. Hopefully I help you, and from now onwards you will use fractals. And I'll see you next week on our live analysis webinar on Tuesday. Again with me until Stuart is back and giving his own live analysis sessions every Tuesday. Thank you for watching, and bye-bye. Have a safe trading day for the rest of the day. Bye-bye.